Hi, this is Amy with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 28th of August. Starting out with the FTSE 100, which is still falling back from that meeting with the May resistance line there. That was around, well, that's currently around 93.50. I think we peaked around the 93.57 mark. That was the all time high. I'm coming back now, even on the basis of the latest Russian attacks in Ukraine. Would be a reason for a retreat here. Support line there around 91.80. While we're above that, still looking for a retest of 93.50, and then best case scenario, the top of the June channel there, up to 95.20 by the end of next month. If there is a rug pull or a general breakdown, August support and the 50-day moving average around 90.30, the worst we're expecting at the moment. See that there's an RSI support line there around current levels, so hopefully we can turn at 91.80 and no lower than that. DAX is next, and here you can see that one would assume that this is also going to be slightly on the back foot as well. Here you can see that we're resting quite happily near the 50-day moving average and the 24,000 level. 50-day line still rising with RSI below neutral 50, so there is now the risk of a test of August support towards 23,300, worst case towards 23,000 at this point, but still within that rising trend channel from the spring of last year, with the floor of which is towards the 22,000 zone. If we do break higher through 24,500, the best case here at the moment is 25,600 for the end of next month, although the way things are going, it doesn't look as though we'll get there in time. Moving on to the Dow, and here it was all about 45,000, and still about 45,000 in the sense that that is support for this market. Top of the channel here up to 47,500, which is our target for the end of September, while we remain above the 50-day moving average, 44,300. A couple of RSI rebounds above neutral 50 in the recent past, so that is a positive, as of course is the way they're in a rising trend channel from May last year, and both the 50 and 200-day lines are both rising too. Onto the cryptos. First one is Bitcoin, where we are still trying to find support after the peak through 124. Hopefully, we've already seen the support area, which was supposed to be around the floor of that channel there, 108,000. So far, we've managed to bounce above that, which is a positive. But we're still looking for this market to give us an end of day close through the 50-day moving average at 116,000, and also to get back above neutral 50 in the RSI window as a sign that the bull run will reignite, and we could head up to as high as 133,000 at the top of that March rising trend channel by the end of next month. On the downside, not really expecting anything worse than July support at 105 at this stage. Moving on to Ethereum, which according to some is going to be the new Bitcoin, at least in terms of the rally passing, or the baton being passed to this market. We had three major RSI rebounds above neutral 50 at or above, and we've got an uptrend line there from the end of last month. That's currently around the 4,400 level. Above that, we're looking for 5,600 now by the end of next month, which is the upper parallel of that rising trend channel from March. But the key here is holding the 4,400 level and that red late July uptrend line. Going on to gold, and here we've been tentatively excited on the basis that the dollar is weakening due to issues with the Fed and President Trump. Here, very close to 34.10, and end of day close above that, or weekly close above that, could unleash up to 3,800 by the end of next month, on the basis not only of potentially World War III starting, but also on the basis that we've had a logjam here for this market since April, and hopefully some of the dam busting price action will come through when we break, or if we break, 34.10. Moving on to Amaroq, which was one of the stars of the show in terms of the small cap area at the turn of the year, hitting £1.20. We're now almost exactly half that level. And the interest at the moment on a charting perspective is that there's an uptrend line there from October 22 running through almost exactly the 60 pence area. So 60 pence is the crunch level. The RSI now at 14, which is ultra oversold, and that's about the most oversold it's been since the early part of 2023. So ideally, if you're a fan of the shares, then 60 pence would be the potential rebound zone for at least an initial bounce towards the 50-day line at 75 pence. But strange and indeed painful that the shares have fallen back so sharply over the recent past. The recent news flow notwithstanding. Moving on to the situation at Aura, and here you can see that we've got a nice little breakout there through recent June resistance around 8.5 pence. Above that, looking for the top of that falling trend channel as high as 14 or 15 pence by the end of next month. Positives at the moment are the way that both the 50 and 200 day lines are both rising, as well as the gap close buy signal and recent trend line break, or at least recent resistance break at 8.5. But above 8.5, looking for reasonable upside there. Moving along to Anglo Asian, where I thought I'd just look at one of the more slow trending situations. Here we've got a rising trend channel, floor of the channel there around 160, top of the channel there up to £2.10, which we're looking for by the end of next month. Nice rebound in the RSI window as well. A couple of rebounds there in the 40s, and that suggests that we can head up to new highs, especially given the way that the 50 and 200 day lines are both rising in parallel at the moment. Onto Avacta, where I suppose many fans are expecting a big move to the upside. Well, they've been expecting that for a long time. We already had big turnaround above the 200-day moving average, found support at the 200-day line. So in theory, just on that basis alone, we're back in a bull trend, and any dips are now dips to buy into. We're also looking very closely to see if the 200-day line is rising, and I can't quite see it myself, but perhaps it already is rising. That would suggest that we're going into a golden cross, and that the run up to a golden cross tends to be the strongest part of the cycle. In terms of the near-term resistance, looking for 64 pence over the next couple of weeks while we're on the right side of 50 pence. After that, there's nothing really, hopefully, on the chart until we get up to the 85 pence that we had, resistance we had this time last year. But the big breakthrough here is finding support from above on the 200-day line. Moving on to B90, which sounds like some kind of 20th century technology thing, but here you can see that we've got this, that's probably Joe 90 actually. Here you can see that we've got a broadening triangle there from the beginning of 2024. Top of the triangle there heading for 5.25 pence, which is what we're looking for by the end of next month, while we remain above recent support for the shares at 3 pence. Also see there was an RSI 50 rebound last month as well to keep the bullish vibe alive. On to Conroy Gold, where did actually meet the company. I think a couple of years ago. I think it was the old management. Nice people, and you can see now that with the latest rejig of the company, there's a rising trend channel base, top of the channel there, heading for 10 pence. Looking with that by the end of next month, while we remain above the 50-day line, which is currently at 5.3 pence. So hopefully they will do well. On to Cambridge Cognition, which I think has had two RNSs today. The first one was the changes to the board, and well, about three RNSs. Changes to the board and interim results, and then the £1.12 million placing. That gives us a gap close buy signal, and here you can, and as well as a bear trap rebound, in fact, and as well as a bear trap island reversal. So this has got it all going on at the moment. On the technicals, which are looking good, especially given the way that the shares have risen on the placing news, we're looking at or regarding the shares as being in a broadening triangle there from back in December, top of the triangle there heading for 44 pence, which we're looking for while we're above the the 50-day moving average, at least at 30 pence on an end of day close basis. Looking for that by the end of next month. Moving along to a situation which I covered a lot recently, probably too much actually, which is Corcel. But here we managed to hit our first target there at around 0.3 pence above that. We were looking for a second target there as high as 0.46 pence, and we're nearly there now. There's nothing now between 0.46 and the old support on the way down at 0.72. So let's see if Corcel can do that maybe by the end, or head to that area by the end of October, giving it a bit of time. But obviously, first we need to get to the 0.46 level, and we're looking for that imminently in coming days. 50 and 200 day lines both rising, so looking good at the moment, especially while we're above the 0.35 zone. Moving on to Enwell, and here we can see that the shares are making progress, bouncing off the 200-day line and RSI 50 plus rebound. Minimum here, hopefully the 29 pence level while we're above the 20 pence level, and ideally stay above 21 on a mid-close basis. On to Empire Metals, where we were looking for 60 pence as a best case scenario target, which was the red resistance line there. Looking at that actually in September, not in August, but the shares have beaten expectations, but hit 60 pence right on the nose, which is very pleasing. Still looking for further upside towards, or at least a retest of 60 pence, while we're on the right side of the latest gap there at 51 pence. Onto a company which presumably has changed its name because I haven't heard of it before, Focus Xplore. I think that was an RNS yesterday or the day before. Here you can see key reversal to the upside. The RNS obviously well received after today's exploration update, and looking for the shares to hit the top of that rising trend channel base at 0.08 well, at least by the end of next month, if not sooner, while we're above the floor of the channel there at 0.04 pence. So looking rather better there on Focus Explore than we have for a long time. Moving along to another situation which is of concern, a bit in the Amaroq kind of way. Here we've got Helium 1, which has finally broken down rather concerningly through the old 3/4 of a pence support. Looks like we might have a target here as low as 0.32, which is the lower parallel of that falling trend channel. Obviously, we did have the company previously raise money around the 0.2 pence or 0.25 pence area back in the beginning of last year, and obviously that went rather well. Maybe the company will think of the same trick again if the shares go any lower, which does seem slightly counterintuitive. Moving on to the situation at Rockfire, where I was looking for a rather ambitious 0.22 target. Still looking for that, especially while we're above yesterday's support zone around 0.17, and hoping for that in over the next week or two. That is a resistance line projection from this time last year. Finishing off with Tungsten West, which had an absolutely fantastic RNS today, which largely comprised of an LOI from the US LOI. And here you can see that the shares have tried to retest the old June resistance around 16 pence. Perhaps a little disappointing that we haven't been up higher than that, given how good the news today is. But at least while we're above the 50-day line at just under 10 pence, looking for a retest of 16 by the end of next month, or hopefully much sooner. That's it for me today. More updates tomorrow.